This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So 2020 is a tough year for investors who like to invest based on earnings. And this is really where Zacks.com can be your friend. This is really where the kind of things we have on our website can really help you to try to find good quality stocks right now. So we have this thing that I've talked about many times on almost every podcast called the Zacks Rank. And maybe you've gone to Zacks.com and you've checked it out, or you've just been on Zacks.com, you've kind of seen that thing with the rank and you're like, okay, whatever, and not pay much attention to it because you're looking at the charts or other information on there. But the Zacks Rank can be a really good tool to use to try to find a good quality stocks, actually, and to find them in times like this where earnings and other kind of fundamental factors you may use might not be working as well. So how can you use the Zacks Rank right now, though, when earnings are all over the place? Because we know that most companies are withdrawing their earnings and revenue guidance for the full year. There's been, there's a select number that aren't doing that, but it's the vast majority of them are, because no one knows what's going to happen the week from now in the economy and with the pandemic, and now with these protests and some shutdowns from that as well. So, earnings are, nobody has any clue, and the analysts are doing the best they can. Usually we'll get an earnings report in now, and then they'll kind of see what happened last quarter, as much guidance as the company's giving for this quarter, which some companies are doing real well at trying to provide as much information as they can. So then the analysts are pretty much slashing the estimates for the full year based on even more information that's coming in. So we're seeing a lot of those earnings on the decline. So why would I want to use the Zacks Rank when that is all happening? Well, because the Zacks Rank does have this thing called the Zacks #1 rank, which is the best, the top ranking, obviously number ones, right? It's the strong buys, and the Zacks #1s usually mean rising earnings estimates. So who has that right now? We just went through the earnings season. We're still kind of on the back end. We're getting the retailers here and some of the fiscal year reporters. But who would be seeing the analysts actually saying, hey, I need to raise it here instead of I need to cut it? So that's where using the Zacks Rank #1s can kind of give you an advantage to try to find the companies that, hey, maybe something good is going on here, and that's why the estimates are being raised. Now, it doesn't necessarily mean that the earnings are growing year over year for that particular company, just because it's the rank of #1. But it means right now for this coming year, for 2020, that the analysts are in some kind of agreement and raising their earnings estimates for this year. And I like that because, as I just said, almost everybody else is getting it cut right now, right? So we know that to find those that are actually doing something well right now, because that's what you'd have to be doing to have it rising here, is difficult. And so let's start by using Zacks.com and that #1 rank to try to find some good quality stocks. Now, I do want to focus on the value stocks here on the Value Investor Podcast. These are the cheap stocks. Most of them aren't in the hot areas, as we know, right? So I was a little dubious about, well, how many of those are going to be #1s? I've kind of looked around and seen how many of the growth stocks are #1s, but how many of the value, like true value, are #1s? So I did just a basic screen, which you can do on Zacks.com as well, with the Zacks #1 rank, which are the strong buys. And remember, there's not that many of those. There's only a little over 200. Sometimes it's like 210, 220 or so, give or take. It can change every day. The rank does get tabulated. It's computer generated every day. It's based on the analyst estimates, remember. And right now there's a 210 Zacks Rank number ones, and that's out of 4,400 stocks that we have the ranks on, approximately 4,400 stocks. So these are the best of the best. And I wanted to put the cheapness in with that. So I did PE under 20, and that's a little higher because I wasn't so sure I'd get too many under the 15. So I did under 20. And then I did price to sales ratio, which is one of the secret fundamentals you can do. I guess it's not so much a secret, but not as many people use it. And I like to use it. And you look for it under 1, because remember, anything under 1 means, so say it's 0.5, means we're paying 50 cents for every dollar worth of sales. That's what I want to do. I want to get those sales on sale, essentially. So price to sales ratio under 1, PE under 20, Zacks Rank number 1. How many did I get? I thought I'd only get like a handful, maybe, like, I don't know, 6, 7, 8 of them maybe, but I got 22 stocks. That's a little better than I thought. Out of 210 that are Zacks Rank number 1s, 22 are value stocks. And these are hopefully having rising earnings here. What kind of companies are values and have rising earnings? I was as curious as you are, and so I picked 5 of them out of the list. You won't really be surprised after I go through this list of what areas they're in, but most of these companies were new to me, so hopefully they're new to you too. So these are some hidden gems out there that you might want to take a look at and drill down a little deeper, watch them on the next earnings report, and kind of see what's going on. So let's dive right into them. The first one is AMKR Technology, ticker AMKR, and it's AMKOR is the name, AMKR Technology. And these guys, I had to go to their website because I'd not heard of them. They offer, it says AIP solutions to enable 5G growth. So that's a hot area, right? They are really in semiconductor packaging and test services. So I guess the semiconductor companies come to them for these kinds of services in the semiconductors. So we only have one estimate on AMKR because it's just not widely followed on the street. And market cap isn't that small, so I'm kind of surprised they aren't widely followed. 2.7 billion market cap, and they do not pay a dividend. Year to date, these shares are still down 11.8%. So they're still kind of on sale. They have rebounded off the bottom, but just about everybody has rebounded off those March lows now. So yes, you're not getting them as cheap as you could have a couple months ago. How cheap are they? They have a PE of 15, and the price to sales is just 0.6. So pretty cheap. Now, what about those estimates? What's happening there? They made 56 cents in 2019. They're expected to make 70 cents here in 2020. So no, it's not on a decline year over year. And one estimate is higher in the last 60 days. So the one analyst we have is been bullish in the last 60 days. That was probably after their last earnings report. And that's 25% earnings growth year over year. So that's pretty solid. I took a look at 2021, also expected to rise a little bit there. Also nice double-digit gains, 28% in 2021, looking for 90 cents. So the earnings scene looks really good with AMKR. As I said, who's getting the Zacks number 1 ranks right now? These kinds of companies that are not seeing the cuts. So AMKR, AMKR. Okay, let's switch to the number 2 on the list, APOG. Apogee Enterprises, APOG. You might have heard of this one before because I have. They've been one of the better ranks for a while, and they do glass and metal product services. So what they do, though, is 90% of the revenue actually comes from architectural glass, framing systems, and installations. So they install windows in skyscrapers. So all that construction that's going on, and that was considered essential during the state shutdowns, almost every state considered construction essential, means those skyscrapers were still going up. So these guys still putting in the windows. One other interesting thing they had on their website too, they also make framing for in like museums for pictures, high-tech framing to protect paintings and other art objects. So there's some good things going on with them. Interesting business. They're a small cap, 645 million market cap only. Only one analyst on this one again, too, probably because of the small cap. The shares are down 25% still year to date, so still pretty depressed here. But let's take a look at those earnings. So they made 238 a year ago, expected to make 221 this year. So this is a slight earnings decline. So not as good as AMKR. So slight earnings decline, down 7%. But the earnings for this year are on the rise. They're now looking for that 221, but that's up from $1.99 just 60 days ago. So analysts might have got a little bit too bearish, and it's not as bad as what they thought. So they were raising on this one. So how cheap is it? PE is just 10. Price to sales is 0.4, so pretty cheap. Yahoo Finance has a dividend yield of 3.5%. I didn't see that there was any cut on that. But all dividends are suspect right here during this time. So be sure to check in on that before you just go, yay, dividend, and leap in there. Go read and make sure that they are paying that, and see if there's any plan to cut it in the future. But given that these earnings are holding up and they have a big backlog, the things are looking still pretty good for a company like this, Apogee Enterprises, APOG. Okay, our third number one is DXP Enterprises. DXPE is the ticker there. This is another small cap. I had to look around a lot to figure out kind of what they did, but they are in numerous of the kind of manufacturing industrial industries. So they list on their website oil and gas, chemicals, aviation, manufacturing, mining, agriculture, transportation, fabrication, power, and refining. So those are a lot of like heavy industrial, the old school type of industries, right? And so they do pump solutions, supply chain services, metalworking services, safety services nationwide. They have like supercenter locations. There's guys in hard hats on the site, so on their website. So yeah, this is very big on the industrial side. So again, these areas were considered essential, and so they were considered an essential business. So they have not been shut down. They did report earnings on May 8th, and so we have a little bit more recent update from them. They made $1.96 in 2019. Year over year expected to decline 15.8%, not surprising. But we do have one estimate higher in the last month after that earnings report in May. So now expected to make $1.65 this year, up from $1.60. That's where you get the rank, right? You get number one rank. If it's expected to go up, everybody's in agreement. We just have one analyst. They're a small cap, 357 million market share. So again, the one analyst agrees with himself, and we will see that good rank if the estimates are on the rise here. Now, what about their total liquidity? I did take a look at that. They have 164.3 million in total liquidity as of March 31st. They had not tapped their additional revolver like loan capacity, and they have 32 million in cash. So no dividend with this one. How cheap are they? PE of 11.6. So a lot of these are under the 15 so far. Even though I searched for under 20, so they're even cheaper than I expected. And price to sales of 0.27. So very cheap on those kind of fundamentals. Year to date, these shares are still down 49%. They have rallied big in the last month, up 43% off those lows because they were basically ignored. But this is kind of a recovery play, right? As everything reopens, a lot of these industries are going to need their services to return, and they're going to need safety and all this stuff with the coronavirus still out there. So this is one you might want to keep on your list as a recovery play here. Again, DXP Enterprises, DXPE. And then switching over to one of the more obvious side of the recovery and why the earnings estimates are on the rise and why it's the Zacks number one rank is BJ's Wholesale Club. Ticker BG. They wholesale warehouses on the East Coast. I guess they're in Ohio and Michigan too. I've never been to one because I'm not on the East Coast, but people love the wholesale clubs, as we know. And BJ's is one of the bigger ones, 5 billion market cap. They also, in addition to the Zacks #1 rank, have the Zacks style scores of A's across all three metrics: value, growth, and momentum. Now, this is not a small cap, and it's highly covered. 9 estimates on BJ's. So they're all in agreement that things look real good here. They made $1.46 last fiscal year, expected to make $2.21 this year, up 51.4% as we all rushed out, bought everything. They're an essential business. They stayed open during the shutdowns. We all went to the wholesale clubs to buy food and everything else. So, this business has been hot. 9 are higher in the last month, and we had one even analyst raising in just the last week. Over the last 30 days, they got to that 221 up from $1.72. So you can see real bullish here going into the summer months. Now, the shares have had a huge rally, up 61% year to date now, but they surprisingly remain really, really cheap here. PE is at 16.5, so just over that 15 level. But that's not too bad given where the huge rally in these shares, and price to sales just 0.37. No dividend with this one either, but you are buying the momentum on this one plus value. So any of these food companies, I've covered them in the last couple of weeks. They all have good Zacks rank now, food related types of businesses. And the supermarket chains and the big retailers that have food and other essentials, they're seeing some good earnings here. So BJ's is another one of those. And then switching over to the fifth stock, which is interestingly kind of related to the BJ's wholesale. It's called SLGN Holdings. I don't even know if I'm saying that right. SILGAN, SLGN Holdings. SLGN is the ticker. And this is another mid cap. It's not too small, but you still might not have heard of it. 3.6 billion market cap is the market cap here. So mid cap, but they are a supplier of, this is what they say on their website, rigid packaging for consumer goods products. So a lot of metal containers. They also do some plastics and dispensing systems. They, as of 2019, they dominate on the metal containers side of the market, and they had more than half of the market share in that side of the packaging industry. And some of their big customers, Campbell's Soup, Del Monte Fruits, you're going to buy the little can of the vegetables or the fruit, and you are, that's what we needed during the lockdown, right? You couldn't go to the grocery store and get the fresh all the time. So you're buying a lot of canned goods. They also do Listerine as one of their customers as well. Now, Campbell's, one of their customers, just reported earnings, and sales were up big in their last quarter, which ended on April 26th. So a lot of cans being used. I think I heard that the Campbell's, the soup side, it was up something like 70% in that quarter. That's incredible. I know I rushed out. I bought some soup because you can't go wrong, right? If you run out of everything else, you can't go to the store. Got to have some soups on the side. So whether or not this kind of trend lasts remains to be seen. But right now, some consumer behavior has changed, making these areas kind of hot. Now, SLGN did announce a record first quarter earnings on April 22nd. So that was even before moving forward here into the big coronavirus demand. So they too were considered an essential business because we were dealing with food and other essential items. And so all 100 of its global facilities, those remained open during the government shutdowns globally. So that is amazing. Volumes were strongest in March for their last quarter. Obviously, that's when most of the US started to shut down. So they had a lot of demand then. Earnings, 6 estimates are higher in the last 60 days, and earnings are expected to be up. This is one of the ones up year over year, 11.6%. So they made $2.16 in 2019, expected to make $2.41 here in 2020. So this is one of the ones out of the 5 where year over year is looking good, as well as the analysts being more bullish on this year. Now, these shares are up 6% year to date, so they are no longer in the negative, but still cheap. PE of 13.6 and price to sales ratio of just 0.8. They are also one of the ones paying a dividend, yielding only 1.5%, but on April 22nd, when they recorded that earnings report, they said that they were raising the dividend by 9%. So who's doing that? Most of the dividends are being cut right now, or they're suspending them. They're not raising them during a pandemic. But SLGN, they are, because some of these businesses are just in the right areas and they're able to perform. They're not shut down and protecting their employees against the coronavirus and able to meet the demand in these areas. So, like I said, a lot of these companies are very interesting right now. They are, as I alluded to, in areas that you might think would be the hotter areas right now. Obviously, any kind of essential good, food, for instance. There were several other food companies on the list of the 22, like I said, supermarkets and other food providers. So that's not surprising. Campbell's just reported, and we'll see what happens to their Zacks Rank. I didn't look to see how cheap they are. Those shares have had huge rally here this year. Most of the good news is probably already priced into that one, though. But some of these others, more hidden gems here because they're not as well-known names. But a lot of them are kind of in the service side, servicing the industries that remain essential businesses and are still seeing strong demand. So let's go over those tickers again here. And keep in mind that a couple of them are expected to see year over year declines in their earnings. So that's a little more value trap-ish, right? I know many of you like the value trap shows I do here on the Value Investor. But given the estimate cuts and what's happening in the global economy and all of that, I'm not too concerned about value traps, to be honest. I'm more concerned about whether or not those estimates are rising for this year, because that's so unusual and rare to actually have the bullishness for this year during the pandemic. So look for strength there, but surprisingly, several of these are not value traps. So let's recap what they are. AMKR Technologies, AMKR, those shares are not a value trap, expected to be up 25% year over year. APOG Enterprises, APOG is the ticker there. This is one where it is expected to be down, so a little more value trappy, but we don't care. DXPE Enterprises, DXPE, and they are also expected to be down, but again, we don't care. BJ's Wholesale Club, BJ is the ticker. That one, no value trap there, expected to soar up 51%. And then SLGN Holdings, also expected to see earnings up 11.6% year over year. And that ticker is SLGN. And as always, I'm trying to find the most high quality value stocks here every week on the Value Investor Podcast, or just interesting stories, interesting areas to look and try to find value, or whether or not you should be in certain value areas like the banks or energy or retail. And I will be looking at all those again coming up in the next couple of weeks, because we're going to have a little bit of a lull here to start the summer before we get to that first quarter or second quarter earnings season, I guess, is coming up here. So we will be busy then. And so we might as well take a look at some of these companies and what is happening with their earnings. Try to buy the best, use that Zacks Rank to your advantage, because that's what it's good at. It is good at finding these, some known, some unknown companies with rising earnings estimates. And that's a positive story, always, always, always. So remember, you want to subscribe so you don't miss a single episode here. We are on SoundCloud, but you have to get us with the Zacks Market Edge. I know, but you'll get 2 shows a week, right? You'll get the Zacks Market Edge podcast and you'll get the Value Investor podcast. Think of all those stocks you'll get, tons of stocks in there. So subscribe over there if you want to get 2 for 1. Or both shows are also on Apple Podcasts as standalone shows. You can get The Value Investor on Apple. You can also get us on Spotify and a whole bunch of other platforms. Just Google it. Just Google Value Investor Podcast with my name, with Tracey or Zacks, and you'll find us. And be sure to go over to Zacks.com. Check out the rank over there. I guess I should do some more podcasts with more secrets of the rank, right? Because it is interesting right now to use the Zacks Rank, at least on the number ones, and to see what's going on there with those. So be sure to go over there. And as always, I'll be back again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.